You're watching Monty TV. I'm Jackie Karsh, sitting down now with Michael Brown. He's a partner at law firm Fenwick and West. Thanks so much for sitting down with me.
Thanks for having me. Excited to be here.
It's an exciting time in the market, but a little bit turbulent. What does that mean for you guys?
Yeah, I think certainly capital markets transactions have slowed down. The number of tech companies that have gone public this year is one. That's significantly down from the bellwether year we had last year, where you had a number of high-profile companies, Coinbase, Compass, GitLab, SentinelOne, many others that went public. So that means that companies are still getting ready to go public. They're getting public company ready, maybe even confidentially submitting an S1, thinking about getting a board of directors ready for life as a public company, thinking about their management team. So taking steps, getting close, but not quite going public yet. They want to be ready when the proverbial window opens and the banks say now is a good time to go public. So that side of the practice has slowed down, but for tech companies that are still private, we're still seeing a number of fundraisings and M&A activities. So both of those areas continue to be fairly active. Fundraising from early stage financings to even late stage financings, seeing activity there. The valuations have come down from the frothy go-go valuations of last year and years past, but there's still money in the ecosystem to be deployed, and so we're still seeing that fairly active.
Do you think a lot of those valuations were really unrealistic, and this is really just a recalibration?
Having represented several companies that had valuations that made them unicorns, I think those were indicative of the markets at that time. I think by traditional metrics, investors and the street might say, gee, those seem relatively elevated. I think it was what the market was willing to bear at that time. I think what the market would be willing to bear at this time is probably less than some of those. So I think companies were fortunate enough to take the valuations presented to them, but now companies are going to have to think about how to deal with that now. And for a lot of companies, the focus is on extending runway, reducing expenses to extend runway so they don't have to go back out to market for a new financing in the near term where the valuation may be significantly less than what it was.
How long do you think the volatility of the market will affect these transactions?
I think there's the possibility, and I think folks really hope that at some point we will stabilize. And I think they're okay if there's a stabilization at a significant dip, but volatility is what makes it really difficult. So I think folks, going back to IPOs and companies getting public company ready, I think there is a hope that potentially in September, we might have plateaued and volatility may have decreased, and there may be an appetite for tech companies going public again. I'm not sure anybody really knows right now.
Are you seeing a pullback from investors?
I think investors are being more cautious at the later stages, the growth stage companies where it's more dollars invested and generally at elevated valuations. I think the investors in those companies are being more cautious in the valuations, being more cautious in which companies they're investing into. Those types of companies also have significant public company portfolios. And the companies in their public company portfolio are down 30, 50, 70% from the last 6 months. And so it puts pressure on them for the new investment they're making to say, is this the right valuation? Earlier stage companies, I think we're still continuing to see a fair amount of activity, and valuations have not compressed in the way that they have at later stage companies. So companies that are, early stage doing initial seed financings or Series A financings, we're still seeing a lot of activity there. Some impact on valuation, but not nearly as much as we are for the later stage companies, especially those in the unicorn phase.